Hello, welcome. This is Bloomberg Quint at Morgan Stanley's annual summit. I'm in conversation with Parag Gupta, and he looks at Indian internet information technology as well as the media sector for Morgan Stanley. Parag, thank you for joining us.
Sure, my pleasure.
Well, Parag, the question on everyone's mind, starting off with the Indian information technology sector, is the kind of guidances that we've seen from a lot of these large cap companies, the index heavyweights specifically, and it's come down to single digits now. Is this the new normal? And if it is so, what do they have to do to move back into double digits growth?
Sure. So that's a question that's on everyone's minds. We're all used to seeing pretty robust growth rates in the past,
Right.
and they have been coming down over the last few years. Now, the key reason that growth rates used to be robust in the past was while IT spends were growing globally at about 3 to 4%,
Right.
Indian companies were gaining significant market share from the global peers.
Right.
Now, the reason for that was because a lot of these projects that were being done were traditionally legacy projects. So basic application, maintenance, or creating a new application.
Right.
Now, a lot of that work has already been done. And if you see what customers are now thinking about, is they're now thinking about how should we position ourselves for the next 5 to 10 years. And that's where the new digital technologies come into play.
Right.
So, customers are talking about how do we migrate to the cloud? How do we become more mobile? How do we become more social?
Right.
Because that's how they want to connect to their customers.
Right.
They're talking about cybersecurity. So as a result of that, while IT spends are growing, there's a new type of spend that's coming into the market. So a lot of companies, when you talk to them, they're essentially talking about two types of spends: run the business, change the business.
Right.
So now,
Yes.
where most of the Indian IT companies used to pioneer was run the business, but where incrementally spends are going is change the business. So
Right.
as a result of that, what we believe is happening is that while Indian IT companies are gaining market share, they're gaining market share at a pace slower than
Right.
what they were, let's say 5-10 years back. And as a result of that, growth rates have come down.
Right.
So
Right.
my view is that IT spends are growing. Customers are positive about how they want to spend on business, but the quality and the type of spends have changed, which is impacting. So my view is, and we've written on this quite extensively, is that we thought that Indian IT companies or the Indian IT industry should possibly grow at about 10% over the next 5 years.
Okay.
Companies are obviously talking about growth rates lower than that 10%,
Right.
which I think is also because there are a lot of verticals which are in a state of flux. So retail has its own challenges. Energy has its own challenges because of
Yes.
what happened with
Yes.
oil prices. Telecom has been a little volatile.
Right.
So what happens is that while some of your key verticals like banking, financial services are growing, some of your other verticals like retail are pulling it down.
Right.
And as a result of that, growth rates are turning out to be lower than expected.
Okay.
So I would say that if we have significant global growth, and if customers get really positive about their own prospects, so
Right.
issues like Brexit does not have an impact, or if the new, the administration does not have an impact on business sentiment in the US,
Right.
maybe you can see spends, coming back in. But otherwise, I would say this is the new norm.
Okay, Parag, would you argue that relatively smaller companies have more flexibility in changing their business models to adapt to the new environment? And in that case, what would you look for in a relatively smaller information technology company to go ahead and put an investment in?
So the two things that are happening with the smaller companies, let's call them the mid-cap companies.
Right.
One is that there are a set of companies that are trying to specialize. They're trying to specialize into engineering services.
Yes.
And they have, let's say 10, 20 customers, which are extremely critical for them because they account for
Right.
bulk of their revenues,
Right.
but they're doing cutting edge work for them.
Right.
So as a customer, they're not necessarily a vendor, they're your partners,
Right.
They're helping you design new services, new products, they're helping you actually creating prototypes of that. And as a result of that, you're actually helping the customer move into that next level that they're
Right.
looking for.
Yes.
So those are the mid-cap companies that are benefiting from that product or service specialization.
Right.
There is another set of vendor set that is actually looking at cannibalizing. So they have nothing to lose,
yeah.
right? They're bringing in new skill sets. So they're bringing in automation. They're bringing in artificial intelligence.
Right.
They're providing a set of services that is being provided by all, but here they're specializing in that. So they
Right.
go as a specialist and not as a generalist. And
Yes.
as a result of that, the customer likes it because they're like, this person only talks automation. So if I want to do something on that front, I think I should just work with them.
Right.
So I think there's a big difference that's happening with the way customers are viewing their vendor sets. They, in the past, generally they would want to work with the best in breed, the biggest of the lot to de-risk yourself. But now they're looking at working with the best in breed for digital, while everything else, they're happy to work with a startup, they're happy to work with a boutique, they're happy to work with a specialist. And as a result of that, some of these mid-cap companies are trying to position themselves as the ones who are cannibalizing someone else's revenue.
Yes.
And I think those are the companies that are also seeing growth rates coming in at the expense of someone else, right? And I think that's the reason why some of these mid-cap companies are talking about double-digit growth. But you also got to keep in mind that that needs to be balanced with good margins. You know, you could be chasing growth, but not a, you know, if that's coming in as not very profitable growth, then it comes with its own challenges. So I think you've got to balance the two.
Right. You know, you spoke about margins, you spoke about automation, and there has been a lot of talk recently about jobs, specifically with the information technology sector. Is a dwindling requirement of human workforce inevitable? And in that case, what happens to the human workforce? Does it go into specialization of some sort?
I would say there are two things that are happening with job opportunity creations by the Indian IT industry. One is that I think there is no doubt on the fact that the opportunities that exist for job opportunities today is much lower than what was the case, let's say, a couple of years back. And it's for reasons like you're bringing in new types of technologies or new ways of delivering services. Automation used to be a buzzword 4 years back. It's now becoming mainstream. Artificial intelligence was a buzzword a few years back. Now every company is talking about it. All of these services are essentially trying to create a higher revenue per employee. And that's what everyone is aiming for. Is it the need of the hour because you're trying to save on cost to deliver better margins? I think that's one part of it, but it's also because customers are demanding for this. And that's the new way in which they would want to manage their vendors. So one is on that front. The second is that some of the Indian vendors, at least the larger ones, are talking about creating more job opportunities in on-site locations, which I think is coming in more from a regulatory perspective. With companies now talking about protectionism, talking about more trying to keep jobs within their countries rather than outsource. I think that's creating some amount of regulatory pressure as well. So you need to manage that also. So you have seen a couple of companies talking about ramping up, their operations in on-site locations, which will obviously also come at the loss of job creation in low-cost locations such as India. So I would say that it's a mix of both. But I would say that the large chunk of it is coming in from the new way of delivering services. Having said that, I think is that a big issue? Well, see, the point is that you've always had new ways of delivering in the past as well. You just have to keep reskilling your skill. So I would say that what is happening with the companies today is that they're reskilling their existing employees. There are obviously new kind of opportunities that are getting created where you can find yourself working in. At the same time, I would say aspiring engineers should also now start thinking about what is the job of the future and accordingly plan for that. So yes, there is going to be pain for some section of society, but there will be opportunities for another.
All right. So now I'm going to shift to the internet, and once again we have spoken to you extensively on the Millennials report that you've written back in February. To touch upon that, you have spoken about the penetration of internet in India. How does it stand now? How is it consumed right now? And how you viewing trends develop over the next 4 or 5 years?
Sure. So I think internet penetration is growing at a very fast pace. Primarily being driven by two things. One is the whole smartphone proliferation. You now have smartphones available at a price as low as 3,000 rupees, which is phenomenal. So it's becoming absolutely affordable for all sections of society. So I think that's one of the biggest changes that have happened, and these smartphones are being made available at specifications that were unheard of. So it's not like a cheap phone is coming with very bad features. It's actually coming with pretty good features. So I think smartphone proliferation is the biggest reason for that, and it's exactly the reason why China saw a significant jump in their internet penetration as well. So it's now happening in India, and now we have talks of a 4G feature phone coming in as well, where the prices could be half of what we're talking about. That gives a further fillip to, let's say, the rural parts of India, where maybe people don't even have 3,000 rupees to spend on it. So I think that whole smartphone ecosystem is developing very fast and very well. The second thing that's happened is the whole rollout of telco infrastructure in India. So with 4G availability improving at a very fast clip, it's happened because of some of the large telcos rolling out extensively. you now have a population coverage of like almost 75%.
Yes.
And companies are talking about this going to 95% in the next couple of quarters,
Yes.
right? So you'll actually have 4G availability across the country. And my view is that India will actually leapfrog technologies and go straight to 4G. Why? Because your smartphones are all LTE enabled.
Right.
So
Yes.
80% plus of all smartphones that are shipped in India today are 4G LTE enabled.
Right.
My view is that in the next 2 years, 100% of all smartphones that will be shipped to India will be 4G LTE enabled. So that's not an issue.
Right.
4G infrastructure is going to be available pan-India. And the third, data prices are just falling, right? So it's becoming absolutely affordable to use data on a wireless network.
Yes.
As all these three put together, what do you call for? Data explosion. So my view is that internet penetration, which currently stands at just less than 40%, will actually be at 60% by 2020.
Right.
So today you have, as per our estimate, roughly about 500 million people in India have an internet connection. In 2020, our view is that this number will exceed 800 million. Right?
Okay.
That's
Right.
a significant jump,
Yes.
right?
Yes.
And 90% of those internet users will be on a smartphone. So smartphone will become the device of usage, and as a result of that, you will actually see significant usage of the internet because you have internet anywhere, anytime,
Right.
with the best available infrastructure.
Right.
As a result of which, your experience could be seamless and phenomenal.
And my final question is to do with your recent report suggesting that the funds raised by a lot of these e-commerce companies in the year of 2017 has been substantially higher than what we've seen in 2016. Is this trend here to stay, and what is so special about 2017 then? What's changed?
So I think generally you see funding coming in cycles, right?
Okay.
A lot of it is driven by sentiment,
Right.
and it's also driven by the opportunities. Now, I don't think that the opportunities went away in 2016. It's a sentiment that went away.
Right.
It was driven by what happened in across the globe, where you saw some sort of softness coming through in technology companies globally.
Yes.
Right. And as an investor, you always have the opportunity to invest in any tech company globally.
Yes.
Now, whether it be on the private side in India, or it could be on the public side or private side in other parts of the globe. So you saw a little bit of that softness creeping into India as well. And generally, when that softness comes in, there's a lot more focus that goes on to your operating metrics.
Right.
What are your growth rates? What are your unit economics? What is your profitability? How do you look 3 years, 5 years down the line?
Yes.
And obviously, there was a little bit of euphorism that was built into the Indian market at that point in time.
Of course,
I
yes.
think that kind of got corrected in 2016.
Right.
And usually, when you see a funding slowdown, companies also start going back to the drawing board to figure out their strategy for the next couple of years.
Yeah.
So you see that a bit of slowdown coming in from the companies as well in terms of their own execution. So you had that year of, I would say, correction that happened, or rationalization that happened on both fronts, on the startup front and on the investor front.
Right.
So you needed that. It's happened. So you come back into 2017, valuations have corrected, right?
Yes, of course,
your
yeah.
expectations have corrected. Markets are doing well. Technology firms globally are doing really well.
Right.
As a result of that, there is that positive sentiment that comes back into the fact that yes, technology will do well. There is this whole big opportunity in India, and hopefully India should be the next big opportunity for us as an investor for the next couple of years as well. So I think that sense of optimism comes in, and valuations have now corrected to levels where it started becoming reasonable.
Right.
So I would say that it's 2016 should be looked as an aberration, not 2017.
Not 17,
Yeah,
right.
because 2014 was good, 2015 was good, 2016 was a big slowdown,
Right.
and now you've seen that big jump in come in again. And again, if you look at the funds raised, it's being raised by a few prominent companies, which I think is a very big differentiating factor that comes in. When you have a slowdown, you suddenly start having funds getting directed to a few startups,
Yes.
because they're the ones who are breaking out from the pack.
Yes, yes,
and that
yes.
helps the startup as well,
Yeah.
because they're suddenly able to differentiate themselves.
Sure.
See, in the startup world, you all talk about what is the moat. One of the biggest moats that you have is funding.
Right.
Right, because if you have it and your competitors don't, you suddenly become the leader.
Yeah.
Right, so I think that's what's happening in India today.
Right.
The larger companies, the ones that have executed well, the ones that have a strategy and are executing, to that strategy, are the ones who are now able to break out, and that actually helps them grow at a much faster clip.
Right.
So it's tough to say how funding environment remains through the rest of the year, but we've had a great start so far. We've had like $4 billion of funds raised so far,
Right.
which is significantly higher than last year already.
Yeah.
And there are talks about more and more investors looking at India. So I would say that it looks as if it's on a strong footing.
Right.
I think what's critical is companies and startups should continue executing on what they've set out for.
Yes.
I think funds will follow automatically.
Well, Parag, it was a pleasure speaking with you. Thank you so much for
Great.
your time.
Thank you.